Hello friends, welcome back to part 13 of my Tesla earnings forecast review video series for 2022 Q3 earnings. However, I should have just ordered those words. It's a very long title with a lot of words in it, but I can't figure out which words I can leave out and still have it be the best description of what kind of a video series this is. We're talking about my Tesla earnings forecast. And the first quarter that I'm forecasting is Q3 of 2022, so I think all those words are needed in there. So in part 10 of this video review series, we reviewed the first major section of my forecast, which is on the detailed model tab of my earnings forecast model. And that's talking about production and deliveries and inventory levels, that sort of business. In part 11, I talked about the next thing you need to build up to a very detailed forecast by site, by model, by quarter, by option type, etc. And that's revenue. So how much revenue per vehicle should we expect for each model at each site? And in part 12, we talked about the cost of sales dollars forecast expectation in my forecast model. And what I'll do is share my desktop with you, and we'll pick up right where we left off, which was around row 872 with total cost of sales dollars. So we figured out by multiplying and then multiplying by all the deliveries, the cost of sales dollars, to figure out for each model for each site how many cost of sales dollars there are, and then we added all of those up to figure out how Tesla might report their cost of sales dollars on the income statement. So what's the next major section in my model? Well, I thought it would be a good idea, since we have cost of sales dollars and since we have revenue dollars, to just divide the cost of sales dollars by the revenue dollars and see what kind of cost of sales percentages are we looking at. And I'm not just doing that in total, I'm doing that at the same level of detail that I have forecasted everything to this point, because I can. So if we look at 2022 Q3 for the Fremont Model S base configuration, you can see I'm expecting a lot of improvement for this model from this site for this quarter relative to the previous one, even though Model S is only made in Fremont, right? So why is this improving by so much? It's because, if you remember from the revenue section, the price has gone up by so much. And there's a delay on that pricing. As I discussed in the part 11 video, it takes a while for a price increase to go into effect. If you cut prices, you have to honor those for everybody who's waiting for a vehicle, so those go into effect right away. The very first quarter after a price cut, you're going to see those price cut impacts come through your income statement. But if you raise prices into a long backlog of orders, you still have to honor the reservation price for the vehicles that people have ordered before that price increase went into effect. So it takes a few quarters, if you have a few quarters long backlog, for those price increases to go into effect, and Model S's start at $105,000 now. So the higher that price goes, the more the cost of sales percentage will drop, because the costs make up a smaller percentage of the revenue per vehicle. That's what we're looking at here. So yeah, we should see good improvement on cost of sales, not only for the Shanghai lockdown impacts from Q2 going away in Q3, but also for stuff like this, these price increases flowing through. So you see the same thing for Model X that I just described for Model S. A lot of cost of sales improvement, with more expected in Q4 as Tesla fills more of the orders to the people who had reserved Model X's at lower prices before the new higher pricing went into effect. Hopefully I have underscored that point enough to keep moving without repeating myself a lot. Here's the Fremont Model 3. So these have not had the same kind of price increases hit yet that the Model S and Model X have in my detailed model. So you see a more subdued impact here from Model 3 as Tesla continues to operate in a challenging cost environment. But in Q4 that should improve a little, and in Q1 of next year improve a little more. I think the price increases for Model 3 have just been more recent, so it'll take longer for those to flow through and hit the income statement, or that's what I'm forecasting to happen. Next, the Fremont Model Ys, pretty stable along the base configuration for now, with those expected to improve more as time goes by. And for most of that to flow through to the bottom line, full self-driving ought to be helping the Fremont Model Y's profitability as time goes by, and the price increases and the take rate increases for that product, and more people buy it on their existing vehicles. Alright, then we've got a Fremont Roadster over here, which I have forecast to start deliveries in Q1 of 2024. Who knows when the Roadster will actually start. Here's where I have it in my model a year and a half from now, beginning at a 313% cost of sales in its first quarter of production because the volume will be so low. They'll be producing so few vehicles per shift that it'll just have high costs until they can get those ramped up to production scale, whatever production scale for a Roadster looks like. It'll still be small. There aren't just millions of people out there trying to buy Tesla Roadster at over $200,000 per vehicle. Okay, next we have Shanghai Model 3s. So these ought to get better from the little bump that they had in Q2 of 2022. There was some idle charges that hit Shanghai Model 3 and Shanghai Model Y in Q2 from having to shut the plant down and then bring it back up again. So those costs were a one-time hit in Q2 related to the shutdown, and we should expect the cost of sales to improve from there. So that's what you see reflected here. And in the Model Ys, where, again, we've got price increases really helping to bring down the cost of sales as a percent of revenue, because the revenue is increasing by more than the cost of sales per vehicle is increasing by. No Shanghai robotaxis in the forecast, or Berlin Model 3s. Not through 2024 anyway. But we do have Berlin Model Ys here, so these didn't have great cost of sales in Q2, but we should be looking at profit on Berlin Model Y in Q3, and then have that profit improve over time. Over the next, 2.5 years, that'll come down to be very competitive with where we already see the Fremont Model Y, and where it'll be in the future by that point, due to FSD price increases primarily and take rate increases. Next we have Giga Texas, which begins with Texas Model Ys. So these probably weren't at break-even yet in Q2 of 2022, but I expect they'll do a little bit better than break-even in Q3, and then improve a lot in Q4 as production ramps up to more profitable levels, and improve quite a bit on that front going forward, and rapidly become more profitable than Fremont's Model Ys, with an improved, more efficient line and process, more castings, and not having to pay wacky California labor rates. So the combined impact of all those should lead to these being a huge cash cow for Tesla in the future, surpassing 50% margin toward the end of 2024, when I've got FSD price rising quite a lot and the take rate going really high. Driving that. Next we have Cybertruck. Cybertruck will start off at the beginning of its ramp in Q1 of next year, if they make any at all. Unprofitable at 154% cost of sales, so negative gross margin in Q1 and Q2. Getting a little past break even is my forecast for Q3 of next year, and then getting, to more typical Tesla profit levels by the end of next year. Tesla Semi, at very low production volumes, should stay unprofitable for probably the first 4 quarters that they're making them, and then get past break even by the end of 2023. So Tesla is guiding that there will be some Tesla Semi deliveries. I think I have 8 deliveries expected in Q4 of 2022. We'll see how Tesla does against that forecast. And that brings us to the total section. So cost of sales percentages by model we have here. These are just the totals, the bottom lines for each model. And then we've got the Tesla leasing cost of sales percentage here. Remember, Tesla breaks out leasing on its own line. So that gives us total automotive percents below that. Pardon my cough. And then we get to the non-automotive section. So here's where the Tesla energy products are shown, with solar panels not always being a very profitable product for Tesla. They must have been in Q2. I'm forecasting that profitability to improve as production scales up, costs level off, and improve, etc. Solar panels should do better. Solar roof apparently did pretty well in Q2, so I'm carrying that forward and improving it more next year. Then for the power walls, they seem to be doing pretty well. Here's what I have in my forecast for those to get better over time. Power pack is being sunsetted as a product, so it'll be mega packs and power walls and no more power packs in my forecast. Then these mega pack percentages should get better as Tesla gets a better cell supply for those. They should get a volume pricing discount on all the cells they're going to be buying from third parties, competing against each other to get the best price from Tesla, buying at huge volume to complete those mega pack orders. And the other is really small, so there's the total for Tesla Energy. You can see services and other has not always been an area that makes profit for Tesla. Looking back at the actuals from 2021, they did report a profitable Q2, which was good to see. So I'm carrying that forward and hopeful that it will improve over the next couple of years with scale and other cost efficiencies and improvements, leading to total cost of sales percentages for all divisions combined. So I've got that improving on the strength of automotive in future years. And 1 minus the cost of sales percentage yields the total gross margin. So that's where these come from. The sum of these two is always 1. And that's all we have for the cost of sales percentage section. So with that, I will tease part 14, where I'll actually be going through the income statement as Tesla reports it. And if you've enjoyed today's video about cost of sales percentages, click the like button. If you're not subscribed to my channel, you could go ahead and subscribe to my channel. And I will see you in part 14.